All right, let's dive right into this. Welcome to The Explainer. Today we're looking at one of the most fascinating and honestly most polarizing stories unfolding on Wall Street right now. We're talking about Parabilis Medicines, ticker symbol PBLS. Now, this company just pulled off the largest biotech IPO in history. It's a stock that has the financial media buzzing, analysts practically cheering, and traditional value investors, well, running for the hills. We're going to unpack exactly what's going on here, looking directly at the data, the science, and the cold, hard numbers.
To really grasp the scale of this story, you have to look at the market cap. Parabilis Medicines is sitting at a massive $4.3 to $4.5 billion valuation. I mean, since its IPO, the stock has surged roughly 58%. It's currently trading right near its 52-week high of around $36.93 a share. By all traditional metrics of market momentum, this is a massive win. But, momentum only tells half the story. And this right here brilliantly illustrates the core of what we're calling the Parabilis paradox. You've got this mammoth $4.5 billion market cap weighed against absolutely $0 in active revenue. Not low revenue, zero. This astronomical valuation belongs to a clinical stage company that doesn't even have an approved product to sell yet. So you might be wondering, how on earth is Wall Street justifying this price tag? To figure that out, here's our roadmap for this explainer. First up, the billion-dollar biotech paradox. Second, 7 massive green flags. Third, 7 blaring red flags. Fourth, the ultimate guru stress test. And finally, we'll wrap up with the final binary verdict. All right, part 1, the billion-dollar biotech paradox. Science meets Wall Street hype.
To understand the hype, you really have to understand the science. Parabilis is built on this proprietary technology called helicons. Essentially, these are stabilized helical peptide therapeutics. Now, why does that actually matter to us? Well, because right now, roughly 80% of validated disease targets in the human body are considered completely undruggable by traditional methods. 80%. Parabilis claims their helicons are literally the only therapeutic modality out there that can both enter a cell and bind to the flat surfaces on these really difficult proteins. So the crucial point is this. If they're right, they haven't just created a new drug. They've essentially created a master key to unlock treatments for diseases we currently can't even touch.
Moving on to part 2, 7 massive green flags, the bull case for PBLS. So there is some massive professional validation driving the stock right now. Look at this. Institutional investors, the sophisticated, heavy-hitting biotech funds, they own nearly 59% of the company. On top of that, you've got 7.35% insider ownership. That means the people running the show, including CEO Mathai Mammen, who, by the way, used to run R&D at Johnson & Johnson, have serious skin in the game. And analysts? They are completely on board too, maintaining a strong buy consensus with an average price target of $41.75. That implies nearly a 17% upside from where it's sitting right now. Plus, Parabilis has a massive first-mover advantage with that proprietary helicon platform we talked about, which basically creates huge technical barriers to entry for anyone trying to compete. They've also got a major near-term catalyst on the horizon. Their lead candidate, zoligatriatide, is set to enter phase 3 trials for desmoid tumors in the first half of 2027. And hey, if you needed even more proof that the industry is taking them seriously, Regeneron, an $83 billion biotech giant, actually participated in a concurrent private placement investment right alongside the IPO. Strategic validation really doesn't get much better than that. And all of that excitement, well, it culminated in this staggering number right here, $770.5 million. That is exactly what Parabilis raised in their record-breaking IPO, completely blowing past Moderna's 2018 record. This huge cash infusion gave them a pristine fortress of a balance sheet. They're sitting on roughly $329 million in cash against just $53 million in debt. That gives them a phenomenal current ratio of 6.12. Basically, they have plenty of runway to actually fund their clinical development.
Now for part 3, 7 blaring red flags, the bear case for PBLS.
All right, so let's pump the brakes and look at their competitive advantage. Guru Focus currently rates Parabilis with a pretty brutal moat score of 0 out of 10. 0. Their competitive moat remains entirely theoretical at this point simply because no clinical data actually proves it can generate successful therapies on a commercial scale yet. And because of this unproven nature, competitive analysis platforms give Parabilis a quality score of just 33%, putting it well below average for business quality when you compare it to peers who actually have, mature pipelines. When we look at the raw financials, they reveal a pretty catastrophic reality right now. Trailing earnings per share,
negative $1.81. They are burning through cash like crazy with an operating cash flow of negative $138.76 million. Their net loss for fiscal year 2025 came in at nearly $210 million. But honestly, the most terrifying metric here for traditional value investors is their book value per share, which sits at a staggering negative $174.15. Literally, the company currently operates with negative equity. So when you take the fact that the stock has surged 58% since its IPO and combine it with those harsh financial realities, you realize pretty quickly that this valuation is priced for absolute perfection. The market is basically assuming that every single thing is going to go right at their clinical trials. But meanwhile, their earnings per share are actually forecast to decline by 23.2% annually over the next few years as they ramp up all those expensive research and development costs. It's a highly precarious setup, guys. I mean, if even one clinical trial hits a snag, watch out.
Which brings us to part 4, the ultimate guru stress test. Graham, Lynch, and Buffett. Let's put this through the ringer. Under the Benjamin Graham framework, Parabilis catastrophically fails. You can't even calculate a Graham number because the earnings are negative, and any defensive investor is going to immediately run away from that negative book value. Next up is Peter Lynch, the absolute champion of growth at a reasonable price. Well, it's a complete failure here too. His golden rule relies on the PEG ratio, which is entirely non-existent when you have negative earnings and a negative 23.2% growth forecast. And finally, the Oracle himself, Warren Buffett. Buffett looks for a high return on invested capital and a durable, lasting moat. Parabilis has an ROIC of negative 89.68%, negative equity, and that 0 out of 10 moat score. Right now, they're destroying capital, not creating it. The stark consensus here is just impossible to ignore. From a purely fundamental cash flow perspective, every single one of these investing legends is telling you to unequivocally walk away. By any traditional business metric, this stock is, frankly, uninvestable.
And finally, part 5, the final binary verdict. Is this a house of cards or a future medical giant?
Well, the answer is that Parabilis Medicines is definitely not a traditional value investment. It's an extreme, speculative bet on future clinical outcomes. If you're a speculative biotech investor, this absolutely belongs on your watch list because, let's face it, the science is incredibly compelling. But you have got to understand the extreme binary risk you're taking here. If Zolukatide succeeds in phase 3, you're looking at massive upside. But if the Helicon platform fails to generate successful therapies, the stock could literally collapse to zero. Because of this, if you do choose to invest, your position sizing must be very, very small if you want to survive that inherent volatility.
It all really comes back to this famous reminder from Warren Buffett. Right now, at around $35 or $36 a share, the price you're paying is exceptionally high. But the value you're getting today, it isn't based on cash flow or revenue or earnings. The value you're getting is pure hope. Hope that the upcoming clinical trial data will actually validate their platform.
Which leaves us with the ultimate question, one you'll have to answer for yourself before even thinking about touching the stock. Can Helicons actually drug the undruggable and usher in a totally new era of medicine? Or is Parabilis Medicines simply a $4.5 billion house of cards just waiting to fall? You'll definitely want to keep a very close eye on their FDA regulatory progress and upcoming trial data, because honestly, that's the only thing that will eventually answer this question. Thank you so much for joining me on this explainer. And as always, keep learning.